Hi, I'm Beryl Nassasan, and welcome to Money Trees, the show where we break down financial top fives for you. The news almost always focuses on the negative, the next big crash or crisis. But bull markets, which are periods of extreme wealth creation, often go unnoticed. Let's buck that trend and take a look at some of the biggest bull markets in history. Let's start with number 5, when in 1942 to 1946, there was a 158% gain in the S&P 500. This huge stock market rally started on April 28, 1942, 5 months after Pearl Harbor. Things looked grim. The Japanese were sweeping Asia, and the Nazis were deep into Russia fighting a war of annihilation. That day saw a fresh low in the S&P 500, even lower than in 1935. However, things turned around swiftly. Consecutive naval victories for the U.S. in the Pacific and a Soviet pushback against the Nazis swung sentiment, and the U.S. stock market climbed through the rest of the war. It peaked in 1946 at more than double its April 1942 value. Up next, at number 4, we have the period between 1982 and 1987, which saw a 229% gain in the S&P 500. In 1982, the U.S. economy was gripped by the second of back-to-back recessions. Unemployment had hit a post-depression high of 10.8%, and the Fed had to raise rates to 21.5% in an effort to instigate inflation. Savings and loan institutions began to falter as their high-risk loans turned sour, and on August 12th, the S&P 500 dipped to 102.42. This marked the low, and from that point onwards, inflation and unemployment started to fall. In 1984, President Reagan cruised to re-election. By 1987, the stock market had tripled, and investors who were brave enough to venture into the market when it was trading at lows were rewarded heavily. At number 3, we have 1949 to 1956, when the S&P 500 returned 266%. The Cold War was in full swing, leaving little to celebrate in June 1949. Communists had taken power in China, Korea was at a stalemate, Berlin was under blockade, and the Soviets had just tested an atomic bomb. The S&P 500 made a low at 13.55, but then began an improbable turnaround. President Eisenhower took office and the S&P topped its 1929 peak, more than tripling in value in 7 years. At number 2, we have the period between 1987 and 2000, which saw a 582% gain for the S&P 500, the second biggest and longest bull market of the past 8 decades started after a huge market scare. October 19, 1987, or Black Monday, saw the S&P 500 fall a whopping 20% over concerns about federal tax policy and interest rate hikes. Stocks jawboned over the following month before starting a relentless rise that lasted 12 years. Stocks rose as interest rates fell and the economy grew. Near the end of the 1990s, the market roared ahead with enthusiasm about new internet companies. And finally, at number 1, we have 2009 to the present day. The past decade and a bit has proved the longest bull market ever, which has seen close to 500% returns in the S&P 500. Over 10 years after the financial crisis bottom, the market continues to rally with momentum. While coronavirus fears may have a lasting impact, this rally has shrugged off political turbulence, quantitative tightening, and trade war concerns and keeps climbing higher. The Federal Reserve instituted 3 rounds of easing during and after the financial crisis to lower long-term rates and encourage the flow of money into risk assets like stocks and corporate bonds. The unprecedented monetary stimulus, which included a quantitative easing program some called money printing, helped goose a slowing economy and revive the financial markets. President Trump has also put pressure on the Fed not to raise the rates, and his tax cuts and manufacturing policies brought a surge of confidence into the American economy. That's all we have time for this week, but see you next time.